Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition. It's hard to keep track of the days here. Thursday edition of Benzinga's PreMarket Prep. Spencer, Israel, Dennis, Dick, Joel out for the remainder of the week. So just Dennis and I with you through the rest of this week here. Hope everyone had a nice, relaxing New Year's. We're here. It's 2020. We made it. We're up pretty much across the board except for Bitcoin, oil, and a few other things. Dennis, how was your New Year's holiday? Oh, I threw you on mute.
That was fast. Usually you give me about a minute on the intro, but I was like,
sorry.
whoa, what's going on? I was actually tweeting out the show there right now. That was fast there, Spencer. No, New Year's was excellent. I actually ended up in Toronto, had a couple of friends there. Brought in the new year. Even my 4-year-old stayed up and celebrated till 12:05. We let him, he's actually 5 now, I guess. So he stayed up and celebrated till 12:05. The 2-year-old only made it till 9 o'clock. So, but we let Spencer. He was awake. You're like, okay, let him bring in the new year. So we celebrated there. It was good. 2020, new decade. Not even a new year, Spencer. Decade. It's a new decade.
I know.
So how were the teens for you?
Teens were good. What did I do? I graduated college in the teens. I moved to Detroit in the teens. Pretty much it. I don't know. How were your teens? You had some kids.
Yeah, the kids. So that's what changed big time for me. I
Right.
came into the 2010s with no kids, came out with 2 kids, and I realized I thought I was busy before I entered the teens, and I thought, wow, I have such a busy life. And then you realize when I'm exiting the teens is like, I was not busy at all before I had kids. And I used to sleep a lot better too, but that's how it works. So anyways, well, the party continues here. We talk about the January effect here, and I guess, we're seeing some of it here in the overall market. This market is ripping here once again back to the highs. You got a little sell-off there for a couple days. Well, the buy the dippers are right back at it here once again. Market trading up 2 points on the SPY, 0.62%. Across the board, I'm looking at all the S&P stocks here, and I'm trying to find a stock that is red. There is almost hardly any that are red. Oil is down slightly here. You do have a few downgrades here this morning, so a couple of stocks trading red, but overall, it seems like all sectors are green. Even the TLT, which often can move inversely with SPY, is trading up here as well. So buying across the board. 2020 coming in with a bang.
Yeah, and I think this rally that we've had for the past few weeks or months, if you want to call it, it has legs because most people don't know about the day-to-day gyrations of the market. Well, now it was the end of the year. You saw all these headlines, all these news stories. Oh, best year since 2013.
Yeah.
Market ends the year on huge rally. People were out on vacation.
Yeah.
Saw those headlines. Are going to come back and say, "Oh man, get me in on this." So that's why I think,
right. I mean, that's a good point you're making there.
And I mean, and that happens. I feel like that's what the January effect is, right? People come back in and start buying, but I feel like we'll see more of that this year because of the great Q4 that we had. So,
and the January effect, the way the textbook is buying, but the way I've always talked about January effect as well is the implications from what you saw in December from like tax loss selling too. So a lot of times you see your laggards, stocks that have been held down potentially by tax loss selling, all of a sudden start to catch a bid in January. And the reason for that is because you got people that were sitting, like let's look at the pot stocks, for example. A lot of people sitting with a lot of losses in stocks in these sectors and probably booking them in December. Well, now all of a sudden that selling pressure is gone and you saw life. And you might say, well, the rally started before January, so what are you talking about, Dennis? Well, one thing to consider is the tax implications, and we've talked about this before, is in Canada, tax loss selling actually ends 2 days before, because in Canada they go by the settle date. So the last day for tax loss selling in Canada was the 27th. So the pot stocks, which are widely owned in Canada, because most of these are Canadian pot stocks, think about the Kronos and the Canopies and the Afrias and the Aurora Cannabises and all the stocks are really beat up. They actually stopped kind of going down the next day on the 28th, and then I'm losing track of days, like you said too, but
on Tuesday,
on Tuesday, 31st, they had a rip and rally. So they actually, started rallying before January, but that happens because, again, if you're a Canadian investor, last tax loss selling day was the 27th, not the 31st. So if you look, wow, what a rally for the pot stocks on Tuesday. Kronos ripping higher. CGC was trading up, I think, at one time 20%. So, all these stocks showing life. And this is kind of the January effect that I talk about, where those laggards can become leaders for a little while. And, is this the start of a huge bull market in pot stocks? I don't think so. I think there's still a valuation issue. I still think there's competition. I think all the issues that I've talked about before. But just the seasonality effects here, it could be predicted that, hey, maybe January or at least the first couple of weeks are going to show some life. So I would not want to be short these stocks right now. I think there will be another opportunity to get short these stocks again. But right now, after Tuesday's trade showing life, being January 1st here, tax loss selling all done on these things, they could show some life for a while.
Yeah, also good point by Mitch in the YouTube chat. It is an election year. You never know how once we get down that road, how that will shake out as far as cannabis legislation. I did a ring in the new year in Chicago, where cannabis is now legal for recreational sale as of yesterday. So they are excited there. But I mean, yeah, in the midst of a long-term drawdown here. So 2 January effects, right? There was the January effect that most of us know, which is that people just buy everything, come in the new year and buy everything.
That's working.
Stocks go up. And then there was your January effect, which is a little bit different, more related to tax loss selling and laggards becoming leaders.
I think that's why the laggards get bought. And leaders can sometimes become laggards. Those are the effects as well. And the reason behind that, and we aren't seeing that here this morning at all. But stocks that have very much outperformed can sometimes start to sell off, because think about if you're sitting on a huge gain in like a stock like Target, for instance, and it's up almost 100% on the year. Do you want to book that gain on the 31st, or do you want to book it on the 1st? And these are the effects that could happen. We're not seeing this at all here this morning yet. But, it's a stock that I'd maybe be a little bit cautious about, even looking at it. You got that 130 level on Target, TGT, kind of looks a little pesky. It's a big whole psychological number. And anybody who is sitting on a big gain here, and all of a sudden, they might be, okay, I want to book this gain. I don't have to pay tax on this till next year now. So I can hold on for a whole another year, as opposed to having to pay in April if you were to sell this on the 31st. So you can defer it for a full year by selling on the 1st versus the 31st. Again, in Canada, not that anybody's investing in Target or that many are Target investors. That's why the last thing I was applying was more to the pot stocks, where I have a lot of Canadian investors. Tax loss selling last day for that was 27th. But in the US, they go by the trade date. So 31st to the 1st. So all of a sudden you think, maybe a stock like Target, I'm just going to be cautious on here. So I'm not saying turn around and sell everything you got that was a big winner here. Just saying, the seasonality effects can sometimes show some weakness in some of the leaders the first week or two of January.
Well, that's all I was going to say. Wouldn't you normally see by like the third? I feel like by the 3rd or 4th trading day, we would know, right?
Yeah, and I mean, and Spencer is making a good point. It's not, and I said this right off when I started. We are not seeing this part of the effect yet, and it doesn't have to happen. Like, nothing is like clockwork, and it's guaranteed that stocks are going to go. The leaders are going to become laggards on the first day because of these effects. There's all other effects happening there too. So on any given day, there's multiple effects happening on a given stock. I'm saying there may be a few people, maybe some big institutions, that might want to sell. Is that going to overpower the overall buying because the S&Ps are up, 2 points here, and everybody wanting to be in stock? We don't know that, but we just know, that there is seasonality effects that can affect stocks, and they might be able to push the price lower. But if there's more buyers than sellers, the price is still going to go higher, right? So, you don't exactly know. But AMD is another good example. It's been an unbelievable performer. So could AMD show some relative weakness here? Not showing it here, I'll tell you, at 8:10 in the morning here on the first day. It's up another $1 here again. But again, it's a stock that I, in my own trading, would probably be cautious with for a couple of days here. I'm not chasing AMD up $1 here this morning, because there is the potential that maybe after 9:30, maybe some sellers come in. And remember, there is the majority of institutional traders that are probably not at their desk at 8:10 in the morning. Majority of institutional traders probably not going to be trying to sell a big chunk of AMD in the pre-market because the liquidity is less. I mean, AMD is always somewhat liquid, so maybe it's not the best example, but there's a liquidity increases substantially after 9:30. So I'm not saying go get your short and shoes on and sell AMD and sell Target. I'm just saying be aware if you're buying it up here this morning another dollar, that historically we do see sometimes these effects take place in the first week of January where leaders can actually become laggards and laggards can become leaders.
All right, let's talk some individual names here. Let's talk about SAVA. What is going on in Cassava Sciences here? There's a lot of insider buying going back 2 weeks. So let's bring it back to
This
Friday.
stock's crazy.
Friday, December 20th. We have a director buying 76,000 shares at $1.86 per share. Let me pull up a chart here real fast.
Yeah.
So some buying on the 20th, more buying on the 23rd, more buying on the 20, or what was it? It was Monday. Was it Monday? Crap, I don't even.
There's been a lot of insider buying in this. Even
actually, anyway, there's more this morning.
CEO was on Tuesday and he bought more shares again, another 100,000 shares. So, I look at these filings and I trade on these filings. I don't follow this story. I don't know anything about this company fundamentally. But it hits the Benzinga news filter, and obviously, we talk about sources, and we've showed this before. If you check the SEC button in your sources, you will see these filings as they come out, and they sometimes really move stocks. I actually bought this stock. I believe, it's going back a week and a half ago, but I bought this, I believe, in the 2 handle. After it might have even been in the $1 handle, but it was very early on the first big insider buy. And I'm like, oh, that could kickstart the stock. Scalper blood in me, I did not know it was going to kickstart the stock to take from 2 to 7. I thought it could kickstart the stock. Like often these, insider buys, maybe stock moves 5-10% on these, maybe sometimes 2 or 3%. I don't know if I've ever seen one move 300-400% here, which SAVA has done if you're taking it from the low where it was $1.65 on the 19th. I don't know if there's another story here happening either. Again, I haven't traded this for the last few days, so maybe there's more of a story here. I don't follow the company fundamentally, but I can remember making a trade off the insider buys. And I sometimes some of these nights I make 7-8 trades on insider buys because they have the potential to move stocks. They don't always move stocks, but on the little stuff, they tend to move stocks, especially stocks that have been depressed for a while. Get a big insider buy, can be a turnaround. So I made some money with it, but again, scalper blood, I sold way too early.
So just to recap, you got some buying on the 19th, on the 20th, on the 26th, and on the 31st. And then most of it is from the president and the CEO, but they're also the CFO bought some, and another director bought some as well. So a lot of
insider buying too. It's always worth more if it's a CEO.
Right.
You see a CEO come in and buy. And the one thing you want to look at and you want to make sure is there's a big difference. And I don't think we know if we did discuss this on the show before. There's a big difference between acquiring shares and buying them in the open market, because a lot of times you'll see, these filings happen. And the CEO acquired a pile of shares. Well, maybe they just exercise some options and they were exercising from like $0 or $1, or, if they've just had long-term options that they're exercising. If they come into the open market and they're buying these shares in the open market, which is just something that happened on Tuesday, if we look at SAVA, CEO came into the open market, bought 100,000 shares at $5.53. That has a potential to move stock because they're like, boom, oh, this CEO really believing. He's chasing a stock now and he's buying more. That's a big difference than acquiring shares that you've got in options for like a penny or two. So you've really got to be careful when you're reading these filings. Don't just jump on every CEO that's getting into a stock. Make sure that they're buying it in the open market as opposed to buying it and on an option exercise from, just performance bonuses and stuff like that. So Spencer's showing it to you now.
Right. So in the Pro, you want to see where it buys. That's the key.
And the price. See how they make it green for you? Pro is nice. I don't know if there's any other service that does that. Really nice. It makes it green for you, like right there, $5.53. I did not trade Tuesday night. I was actually on my way to Toronto for the New Year's party. But I can tell you, if I would have saw that at $5.53, 100,000 shares, I'd be turning around trying to buy offers. Sometimes there's nothing there. If there's no offers till 6, I'm not going to pay way up for it. I'm not paying up 10%. But if you can pick it up 1-2% on something like that, it's sometimes a good trade. So there is good opportunities in following these filings. And again, if it's a director, it's not worth as much. If it's a CEO, it's usually the best. You see a CEO come in the open market, buying the stock, more often than not, stock's going to start to trade higher.
All right, we took a couple days off, Dennis, so we missed some news from Monday. Not that there was a lot, but we missed the news on Core Laboratories, CLV.
Yikes.
We waited till Monday after the bell to lower their preliminary Q4 guidance and cut their dividend from 55 cents a share to 25 cents a share. Not a good headline. That December 30th afternoon news dump.
I tried to short this after that news hit the wire. There was just nothing in there. And it hit the wire, and there's just no bids on a stock like this. So I'm like, I could have hit a bid of 44. And in hindsight, you're like, why wouldn't you hit that bid of 44? I mean, it closed at 47.5. So how much is this worth? You know, it's bad news. I'd probably be willing to short, at a bid of 46, but 44, it's like, that's pretty far down to chase it. I did not see this, complete fallout happen when the stock went down to 36, or I would have been hitting the 44 bid. But sometimes these things are thin. But it was terrible news. So I was trading on Monday night when this news broke, and I saw it. But yeah, they lower guidance, they cut the dividend. They were citing just even in the press release.
They were citing
saving cash.
They were citing a decline in U.S. offshore activity and slower than expected client discussions.
It just sounded terrible when I was reading the press release. I said, this is bad news. So they really washed it out. It went down. It's amazing how these levels work. We get right back down to the August lows there. We had a couple of lows just in going back to the 36 handle there. And coincidentally, right there, 36.50, the low on December 31st. It's bounced a bit from those lows, but is this the kind of stock you want to come in and say, oh yeah, I want to buy this? I mean, they're slashing the dividend. When they're slashing the dividend, they got problems. So not for me. I'm not interested in buying this and being a buy the dipper on this one, at least not yet. Now, this would be a candidate, though, just to say, let's say, we go a few days go by and all of a sudden you see a big CEO buy down here. That can turn a stock around. So this is now a laggard. So I would want to see, before I get interested in this, I want to see like a big analyst come and defend it, or I want to see the insiders come in and say, hey, we think our company's going to turn around eventually, and we're willing to buy it here. So I would want to see an open market buy by the CEO or the CFO or a major director. That could be a potential for just turning this thing around. But just to come in here and buy it one day after a huge, washout on a dividend slash and a guidance lowering, that's not for me.
I keep having this problem this morning. I keep trying to pull up a year-to-date chart, and I can't because there is no year-to-date chart because it's
we only have today's trade.
We have a couple hours of trading. So, but then what about Rite Aid here? The short squeeze
over
took a breather, or is it over?
Over.
Okay.
I think it's over. Story's over here. And we talked about this on the 27th. I got this one right. So it was trading up at 23, and I said that day, I was like, this is getting pretty long in the tooth, and I would not be surprised if you have a big down day coming very soon for this. And I think I even said, I was thinking it, I don't know if it popped out, but I was even saying that I think it could even be today. It turned around. It was $23. It closed week that day. That was your tell. Get the hell out with that red candle. That was the first day of going on the 27th. Next day, just, killing people who were chasing that thing.
Yep.
Dogs are dogs. They can bark for a little while. You can get these short squeezes here, but is Rite Aid turning it around and going to be, now taking on CVS, WBA, and being one of the? I do not believe that at all. I believe this was only a short squeeze. It squeezed them pretty good, and I think everybody who bought the thing is now caught. It is up at $17 here this morning. In my opinion, it's up 11% here. Is there a headline here this morning driving it? Or is this just continued volatility still?
See any headline.
Okay, there's no headline. I haven't checked my pro here. I'm checking it right now. I don't see a headline here on Rite Aid either. I believe this is a rally to be sold. That is my opinion. So 17.25 here this morning. I would be, if I was in this thing, I'd be a seller of this rally. I'm not, just my opinion. I'm not trading it, no position in it, freely talk about it. But I think the rallies are to be sold in RAD now. I think it's over.
Speaking of rip your face off short squeezes, Tesla, what is in store for?
Same thing. So it had the short squeeze, and then it sold off significantly for a couple of days. Whereas get to right that 400 psychological level and then bounces right out of it again. I do not believe the short squeeze is over in Tesla, though. So Rite Aid, never really had a story. It was just a complete short squeeze. Tesla has a story still. The story was always the issue here with shorts, and the story is still intact. And it's that the electrification of cars. They're the leader in electrification of cars, and this could stay a story for a long time. Yes, I know the fundamentals. That they don't make money or they're barely making money last quarter and they're going to be burning cash. I don't know how much cash they're going to continue to burn though. So I think that story, for the bears is not as much as it used to be. I've always somewhat been a believer in Tesla here for a long time. If you've been listening to the show, it was a stock I couldn't stomach though. That's why when it was pulling back significantly, I wrote puts on it, long-term puts at much lower prices. I'd be willing to do that again if we got a significant pullback, but I don't have the stomach here to come in here and own this stock. It's a hard stock to stomach. If you got a stronger stomach than me, I still think it's going high. I think Tesla could be $500-$600. I really believe that. But I'm not coming in here and buying a 426 because this is also a stock that's very hard to figure out the valuation. The story could cool. The story cools and it could come right back. So it's just the risk reward here. I find it difficult at 426, even though I believe the stock is going higher.
And Tesla, unlike Reddit, does have news this morning. Tesla will deliver their second batch China-made Model 3s on January 7th. And Canaccord is raising their price target this morning from $375. They're playing catch up to $515.
Whoa.
So
big PT raise, stock taking off again. I will say if you're coming in and buying it here, you're chasing though now, because just think, you go back to the trading, which was just on Tuesday morning, the stock was 402. Now it's 426. So you just chased it up 5-6% here, just in the last day of trading. So, and you have overhead supply now going to come in at that 435 where we sold out from before. So it's hard to really justify the risk reward to be paying up here this morning at 426. I think I'd almost be a seller rather than a buyer for you short-term traders out there. Again, I still believe in the long-term story here, and I think this could be $500-$600 stocks. So if you've been in it, I would stick with it in the long term. Short-term traders, I don't know if I'm coming in at 426.
So Dennis, over the New Year's holiday break, I went to the Starbucks Reserve Roastery in Chicago. I went to that new.
What is that? Oh, the big one, the Walmart-sized Starbucks.
No, well, it's not quite a Walmart-sized Starbucks, but it is for, I guess technically 5 stories. Yeah, it's a 5-story Starbucks, Dennis.
How was it? Did you have a coffee?
I waited online in the cold for an hour to get in, like the capitalistic slave that I am. Although I could have waited 2.5 hours, but we went back. So on Sunday, it was a 2.5 hour line just to get into the Starbucks.
What is so special about it? Is the coffee better? The same stuff.
It's not what you and I would think of when you think of Starbucks. It is not. It looks and feels nothing like a Starbucks. There is no Starbucks logo anywhere to be seen. The branding is completely different. It is its own animal, right?
Are they going to come up with more of these stores? Is this a thing that they're just
they already have one in Seattle, and I believe there might be one in Tokyo. So they have a couple of them. This is just the newest one. But honestly, it's just to be frank, it was fine. It's a place for coffee nerds and tourists, more or less. But which I was. But it was good. I mean, it was expensive, but it was.
What's it like in there? Is it just
Okay. So you walk in and the ground floor is like a little shop and a small little bakery, like a cafe, and you go up one escalator and it's like food, right? They all the pasta, pizza, all this food, right? It's a floor dedicated, basically a restaurant. Go up one floor and it's the coffee floor, right? So you buy. That they do all these fancy things with coffee that I'm not quite sure because I don't really know a lot about coffee. But they serve all these fancy coffees and at different size, not like a Starbucks size. It's like you can get it's a lot of espresso, and they do all these fancy brewing tricks. And it's basically a coffee bar. One floor above that is like a bar. It's like a bar with coffee. So there's a lot of drinks with coffee and alcohol.
Like alcoholic drinks?
You're right, alcohol and coffee mixed together.
Oh.
And then above that, they have a rooftop terrace that,
the dance club up there.
Right. I don't know. We didn't go, but yeah, it was packed. It was. I mean, like I said, I waited an hour in the snow, light snow, but snow to get in. And then you had to.
Was this why you went to Chicago? Was just go to the store?
No.
What else did you do in Chicago?
Yeah, a bunch of touristy things. But I played tourist for a few days. But
that's fun.
The Reserve Roastery is, if you're really into coffee or are into touristy things, then you would like it. But otherwise, I can't say I'd recommend it. It was pretty pricey. Pretty pricey.
Problem is I don't drink coffee, so I don't know if I'd wait an
Yeah.
hour and a half to get into a
No.
big coffee shop. But
No, I wouldn't recommend it for you. But it was good. It was a good experience. So they've got a few.
it sounds like they're doing well if it's that busy.
Yeah, and it's right on like the main strip. It's at on Michigan Avenue. It's like the main strip of where all those big retail shops are in Chicago, or near where Macy's is, and it's the old Crate and Barrel location, I believe. But it was good. It was good. But can't say to recommend it if you don't like coffee. So not for you, Dennis.
Not for me.
So I just wanted to talk about that for a hot second because it was definitely a unique experience, that's for sure. Not like a normal Starbucks at all.
What do you think of the Starbucks chart here, Spencer? This one I'm torn on, so I'm going to throw it to you on this one. We throw to our technical analyst, Joel Elconin, but he's taking the week off, it looks like here. So Mr. Joel will be with us next week.
It does appear to be that way, yes.
Yes. So this is a stock that I don't want to do the technicals on it because I've got this one wrong a lot of times. It's like one of those stocks. You know what? You have some stocks that you just don't trade well. And if you just don't trade the stock well, don't trade that stock. You know what? Starbucks is a stock that I just don't trade well. So I'm going to let you do the technical call on this one.
Well, you know what's interesting is it didn't participate, really. I guess it did a little bit, but
not really. That's a good point.
It didn't. And we talked about this last week. If your stock is not participating in this rally, then look around you, right?
That's a good point.
That being said, I don't know if you can call it a cult stock, but it's definitely a cult like product, right? And the goodwill it has socially is tremendous, and I don't think you can underestimate that. Here, I'm curious what the PE is now. I haven't looked at the Starbucks PE for a while.
It's got to be like 28, 30.
Let's pull it up fast. And forward PE is 28 or 20.
Oh, that's a good guess.
Call it 29. So yeah, very good guess, Dennis.
Where do I pull that out of a hat?
I don't know. I don't hate it here.
I'm the same. I don't hate it here. I like it better if it's breaking up above 89 though, and then starting to look at 90. 90 looks like overhead supply to me. So you're like $1.50 away from there. It's like, I might wait till I see a breakout over 90 to really get interested in this thing. Again, it's a stock I trade very poorly, so don't follow my opinion on this one.
I mean, pull up a longer-term chart, and this thing is a beast. So
been a beast. I never got the whole. You know what? And this is an example of letting a fundamental thesis just affect your thoughts towards the stock. And I never really got the whole $5 coffee thing. And I know it's not true that they have lower price coffee as well, but all these fancy coffees, I never really got that. And that's probably why I never participated in the majority of this rally from $20 to $90 in the last decade.
I mean, first of all, there are a lot of locations. I don't know how many they have nationwide.
They're everywhere.
They're everywhere.
It's like birds. They're everywhere.
Everywhere. But it seems like I'm never in a Starbucks that's empty. They're always crowded. I don't know. Maybe it's when I go. I don't know. But they always seem crowded to me. I don't know. I don't hate the coffee. I don't hate the stock here. I'm like you. I don't know if I'd buy it right here, but it doesn't look bad. I mean, at the weekly at least, it doesn't look bad.
Over 90 gets more interesting. That's what I'll say. Yeah. Here, kind of like, throw me, not a pitch up the middle. I'm going to move on to the next setup.
I mean, I like that it's I actually like that it's not at like 90.
You start to talk yourself into this. It's like Spencer Israel's going on, going to go.
Well, I don't actually. I like that it's not at 95 or 100 here. Gives me a little bit of room to run.
There you go.
So
$100. I could see a Starbucks being $100 stock. Could Starbucks be one of the better performers in 2020? Still to be determined. I want to see it get above 90.
Yeah,
90 is a big test.
So 8:30 here. We got about 5 minutes before we go to our first guest, or our only guest today, Ivan Feinseth from Tigress Financial.
I want to do imbalances here quickly.
Yeah,
they're interesting. They're small in the most part, but then there's a few standouts here. Taiwan Semiconductor, 190,000 shares to buy. Big buy amounts in TSM. It is ripping here this morning. It is already trading up $1.35. Remember, trades as an ADR. It's already moving here. I would say $60 on TSM. That's the big level here. That's where it's going to challenge here this morning. Your chip stocks have been unbelievable performers really in the back half of 2019. Does that rally continue? Does it cool off? Well, that's still to be determined here because we're still, we're not even into the really day one trading here yet. So I don't know if this is necessarily a stock that I'm chasing again, because the stock has really been an outperformer in 2019. And again, sometimes in the first week or two, there's some cool off period. I'd love a cool off period to maybe get long some of these stocks though. So TSM, I'd say 60 resistance. Just quick imbalances, looking at other stocks. Procter & Gamble, 105,000 a sell. Coca-Cola, 106,000 a sell. Could that be the little, well, we're not, we're going to go full bull mode here again. So these are defensive plays. Could these stocks lag because of that? I think so. I think these could be laggards because of that. So careful on your Procter & Gamble's and Coca-Cola, where we see them somewhat participating here early. And by somewhat, I mean not hardly at all. They are green, but just slightly green. These are stocks that could actually go red on a day like this. So if we stay really strong, assuming that we don't turn around here, I'd be cautious with a lot of your XLP components, the consumer staples, because these things had an okay day on Tuesday. They're still kicking around near the highs. And this could be an area of profit taking as well for the little, my own little January effect I talk about, where leaders become laggards and laggards become leaders. Some of your consumer staples had a pretty good 2019. So there could be some profit taking in these things coming too. And they're just not the kind of sexy names that people are probably jumping into and saying, I think it's going to be Procter & Gamble that drives the next big bull run. So if you really think it's the next big bull run, I don't want to be owning the names like Procter & Gamble and Coca-Cola.
And we have some ratings here, Dennis.
The analysts coming out of their slumber. They've been on vacation too.
Back.
Yeah, and typically we start to see this. With the big days we're going to see is Monday and Tuesday. You're going to see a lot of big names under the analysts, because that's where they're really coming back. Sometimes you still have some analysts taking some vacations, extended maybe for an extra day or two, like our technical analyst, Joel Elconin. But I think you're going to start to see some ratings pop in. It's been quiet for ratings for the last week or two because we've been in holiday trade. We're starting to come out of holiday trade now. The analysts are getting back to their desk, starting to write their reports, doing their analysis. I would expect to see some major analyst ratings on Monday and Tuesday of next week. But we have a few today too.
Yeah, actually, one thing before that, I just remembered you didn't respond to my text. I sent you a picture over the weekend of I was at the Zoo Lights. They were sponsored by.
To look now.
They were sponsored by Invesco QQQ. You never responded. I said.
You sent this to me?
I sent you a text on like.
Oh,
Saturday
you did.
night.
I missed this.
You didn't respond.
I missed it. I'm looking at it right now.
The Zoo Lights were sponsored by Dennis's Hedging. They're sponsored by Invesco QQQ.
Really? It is true, actually, too. I do use QQQ for a hedge all the time. Where are the Zoo Lights? Where is this?
Chicago.
This is Chicago, the Zoo Lights. Were the Zoo Lights pretty cool?
Yeah.
They have the animals all lit up as well?
What? No.
Did they like put
No.
lights all over the lions?
No.
That'd have been cool though. Think about like at night you're watching and there's the lion, he's got like lights on him.
Yeah.
That'd have been cool. Why didn't they do that? Good idea for you zoo people out there. Light up the I'm sure I'm sure there'd be a few people.
So the reason I thought about that now is because Invesco is getting downgraded this morning from Wells Fargo to underweight. They're giving it a $17 price target. So IVZ getting downgraded.
Let's go check out the chart. Have not looked at IVZ in a long time. Not trading down here, though nothing is here this morning. Downgrade. This is 6.92%. This is more of a dividend play than anything, though. So I wouldn't expect this thing to lose $1 or something on downgrade there. Actually, 2019 was not a great year for this one, and 2018 was not a great year for this thing either. This has kind of been in the gutter. So
I mean, but that makes sense because there was just so much fee compression happening across the board.
Great point.
So
yeah, these ETFs are all coming, and there's a million of them.
Great for us, great for investors. Well, not if you're an investor in IVZ, but great for investors who use their products, not great for Invesco.
Yeah, like the ETFs, there's just so many of them now. I mean, you look and you think about how many are mimicking the Qs and mimicking the.
Yep.
I mean, I was just thinking about like SPY. Well, then you can go and you got IVV, and then you got there's like a dozen of these things.
It's crazy, but SPY is expensive to think, but it is.
And that's why you get these other ETFs that come out with a cheaper fee. It's like, okay, well, I'll buy the cheaper one. So that's doing the exact same thing.
Yep.
So the fee compression is a fantastic point you're making, and it shows up in the stock of IV Zebra.
I mean, you're seeing the same thing in State Street, really across the board in this industry. Just fee compression. Great for investors, not great for the companies, but that's kind of the way it's going here. So we will get to the rest of the ratings after our guest, but I want to bring him on now. Ivan Feinseth. He is a partner and CIO at Tigress Financial Partners. Ivan, good morning and Happy New Year.
Happy New Year to you. Thanks for having me on.
How did 2019 treat you in the market? Good?
Very good. I was, bullish throughout the year. When I was on your show, I kept saying any trade-related sell-off was a buying opportunity, and certainly we seem to be moving forward on trade, and the momentum of last year looks to continue with the strong open today. So I remain bullish, and I think we'll see further gains. Not as strong as last year's almost 30% gain, but I think there is more upside in stocks.
So more upside for the overall market this year. I mean, how long this rally that we've seen in the past month or so, how long can that realistically go on for?
Well, the first quarter, or at least the first few months of a new year is always strong because you have people starting all over again, putting money into 401ks and IRAs, from paycheck deductions. So usually the last 3 months of the year or the prior year and the first 3 months of the new year are always the strongest. We got good momentum. We got the trade momentum. The Fed is still on the side of the bulls. The fundamental narrative is improving. 2019 was a year of fears that didn't happen. I mean, we didn't get the global slowdown. We didn't get the U.S. recession. We didn't get tariffs torpedoing our economy. None of those things happened, and the fundamental narrative is still in place. So I see further upside, and certainly the market looks to open extremely strongly this morning with almost 200 points, gain on the Dow.
And are you seeing that for the stocks you cover as well? You cover a lot of tech. You cover the FANG stocks. You cover MasterCard.
Yes, I had about 40 highlights as my best ideas for 2019. The average of the 40 were up almost 38%. A little bit better than the market itself, and there were stocks that were up almost 100%, including things like Corvo and Skyworks. MasterCard had a great year. Microsoft had a great year. So I think these same ideas will continue to work. Amazon was a little disappointing last year. I think we'll see better gains in Amazon this year. So I think things like MasterCard will continue. I remain bullish and think there's a lot of opportunity out there.
Ivan Dennis Dick here. So what would be your top picks like, and what sectors are you looking at for 2020?
Well, let's see. We could start in communications. My top picks there are Google, Alphabet, AT&T, which has a tremendous 5% dividend and will benefit from the further monetization of Warner Media and the launch this spring of their HBO Max streaming service. Facebook continues to grow their user base, grow their advertising revenue, even in the face of all the controversy. I think a lot of the controversy is behind them, and they will continue to look for new ways. They are buying and getting, gaming services. I think you'll see gaming, some more e-commerce, Facebook Pay. All these things are going to lift Facebook. Verizon and AT&T will be beneficiaries of the 5G high-speed network rollout, and Walt Disney will continue to benefit from the strength of their Disney Plus subscribers. Within the first month and a half, they had almost 25 million subscribers. Their goal was between 75 million and 90 million subscribers in 5 years. I mean, they're almost a third of the way there in the first couple months. On the
what does it
consumer
mean?
side,
The overall streaming, and obviously this move to streaming, and you just mentioned a couple times, was AT&T and their HBO service, Disney Plus. What does this mean for Netflix? Like, obviously Netflix was the place to stream. That's where everybody's watching. Now there's other services coming. I've argued before that the competition and the valuation makes it not as attractive, in my opinion. But that being said, the stock continues to perform pretty well in the face of this competition. What are your thoughts on Netflix?
Surprisingly so. I have been bearish on Netflix. It has held up incredibly well. I mean, they still trade at a huge multiple. I think that they will have to offer discounts and incentives to continue to grow their subscriber, or at least maintain their subscriber base. I mean, I do like Netflix. I mean, I was following The Irishman for 2 years before it came out, and it's a blockbuster for Netflix. Even Bob Iger, the CEO of Disney, says he's a subscriber. So Netflix has great content, but Disney is the king of content. And for almost 8 years, Netflix had the streaming market all to themselves. There are 5 very strong competitors that have deep pockets and can produce tremendous content. And it comes to a point where it's not only financial, but consumers only have so much time to spend watching TV, before you have to work, sleep, and actually interact with other people. So it may be just the face of a limited time bandwidth to what you can watch, which may cause people to switch to some of these other services that may have other content. For example, The Mandalorian has been a huge hit on Disney Plus. When they first announced Disney Plus and The Mandalorian, I said, wow, back in April, this is going to be an incredible show, and it certainly has exceeded expectations.
Yeah, I've watched
both for me and Disney.
I've watched The Mandalorian too, and it's excellent. One concern that I do have, and I'm along Disney for full disclosure, but one concern that I do have is I'm on the Disney, and my kids love it because they're watching all the old Disney movies and stuff. But then I've watched all The Mandalorian. There's not another one coming for another year, and I'm thinking, there's not that much new content on there, though. So there's a lot, like when it first came out a month and a half ago, it's like, oh, there's lots of cool shows I haven't watched. Like I'm watching The Swiss Family Robinson with my 2-year-old and my 5-year-old. There's a lot of, cool shows that I haven't seen for a lot of years. And The Mandalorian was awesome. But now that I've watched The Mandalorian, I'm like, well, what's coming new? Does Disney
I think that's
have some
the
new
point.
shows coming?
I think that's
I got another show for you, The World According to Jeff Goldblum.
We got to go watch that one. Okay.
You got to watch that one. It's great. I mean, I love Jeff Gliss. It's a great show for him, and it's interesting, and you learn.
But Dennis, I think that's the point.
Avengers Endgame is on it. All the Marvel movies, the other Star Wars movies. If you watch Mandalorian with your kids and say, hey, look, there's all these other movies. There are the 9 Star Wars movies. Rise of Skywalker will be on in a few months. There you have my favorite Star Wars, by the way, is Rogue One. So there is a lot of content.
So I have a question for you. We're getting Peacock from NBC sometime in April. Obviously, Comcast, a much more diversified company than just a streaming company. But do you think we'll see some sort of reaction to the launch of Peacock reflected in shares of Comcast come March or April?
I think it will help. Initially, it's going to be free to those people that have things like Xfinity, and I think you can even subscribe directly online for free. So it will help overall have these streaming services for companies like Disney, especially, have a halo effect, which there's nothing beyond Netflix to have a halo effect on, but it will just give consumers more choices, and they will have to not only budget money, they got to budget time.
Ivan, do you have a least favorite stock in your coverage for 2020?
I'm not really focused on the negative side because the market has been so strong. I mean, I am shocked about the gains and the valuation of Netflix as an example, but I'm not really that negative. So, I mean, right now in my consciousness, there's not a lot of stocks I would be either short or negative on. I have so many stocks that I'm so bullish on.
One of those stocks you're bullish on is Wendy's. You have a buy rating. They're launching their breakfast. I think this is the 3rd time around now. Their 3rd attempt at launching a breakfast. They're launching it this year, although I don't remember the exact time they're launching breakfast this year. But you're bullish on Wendy's. You have a buy rating, and what do you expect of their breakfast launch?
I think it will be successful. I don't want to say 3rd time's a charm, but there is strong demand for protein-based breakfasts. They're doing, an egg and bacon biscuit, a chicken breakfast biscuit, and breakfast is a strong growth area it certainly was a huge winner for McDonald's from the beginning, and when they went to breakfast all day was one of their best campaigns ever. So Wendy's is one of the only large, or national chains that uses fresh meat. They have a great quality product. They are in the process of upgrading a lot of their restaurants. In fact, the one near where I live is just totally rebuilt. They're redoing their restaurants. They're putting more digital initiatives as far as kiosk and app ordering. So I think there is further upside from current levels in Wendy's. And they also are focusing on international expansion, which is Wendy's has primarily been a U.S.-based restaurant chain.
And then one more for you here, Ivan. You've got a buy rating, I believe, on Lyft. What is the bullish case for Lyft this year?
Well, first, I think they can continue to gain market share on Uber. And second is that transportation as a service will continue to grow as a bigger part of the total transportation expenditures for consumers. For example, in 2018, total ground transportation was $1.2 trillion, and the combined revenue of Lyft and Uber was less than 0.5% of that. It is going to grow as a percentage of that. Urban-based millennials are not buying cars. They're using transportation as a service, Lyft and Uber more and more. People, when they go on vacation or business travel, are renting cars less. They are using Lyft and Uber more, and I think that Lyft's focus on healthcare-related transportation, which in many cases is paid for by either Medicare or your insurance company, is a huge opportunity. I think that food delivery is great for the consumer. It's not great for the company, and I think that I like the fact that Lyft is not focused on, food delivery or other type of, trucking. They're focused on passenger transportation and with this huge opportunity in healthcare transportation, where older people that can't drive are not going to be dependent on their kids to take them to the doctor visits and other things where that they can't get to because they can't drive. And there's an application where you can actually send a Lyft car, or a doctor's office can send a Lyft driver to pick them up and take them home.
So why do you like Lyft over Uber?
They are the smaller with the, stronger growth rate, and they will gain market share on Uber as well as gain penetration into the transportation as a service sector.
All right, Ivan Feinseth, partner and CIO at Tigress Financial Partners. Ivan, thanks so much for coming on. Happy New Year once again.
Thank you. You too. Wish everybody all the best in 2020, and a huge, lots of prosperity and huge gains.
All right. Have a good one, Ivan.
Thanks, Ivan.
8:47 here. Let's get to some of those ratings that we had teased earlier in this show. We talked about Invesco getting a downgrade. Wells Fargo, very active this morning. So they are upgrading G3 Apparel to overweight. They're upgrading T. Rowe Price to overweight, upgrading Designer Brands DBI to overweight, upgrading BlackRock to overweight. So a pair trade this morning. They're upgrading BlackRock, downgrading Invesco. Also downgrading Janus, JHG to underweight. So I think I got all the, actually there's a couple more from Wells Fargo here. They were downgrading Raw Stores to neutral, downgrading Hanes Brands to underweight, downgrading Signet to underweight as well. I think I got
very busy Wells here this morning.
Yep. So two notes, one on retail, one on financial services, I guess you can call it. But
yeah, if you're looking at most of the ratings here this morning, it's mostly Evercore and Wells. There's there's a Stevens note there too, but mostly Wells and Evercore dominating the notes here this morning. Let's go Signet. We haven't talked about it for a while. It's a stock that you would think has been a laggard, but really, if we look at you just think of it as an eternal laggard. Really, in 2019, it lagged the overall market, but it wasn't straight down like it has been for years. I mean, Signet Jewelers has just been awful every single year. 2015, the stock was $152, and obviously it's $21 here now. It's the move away from jewelry. I mean, this is just it's been this consumer trend that people aren't wearing their wealth as much as they used to in the past. And I think that continues. So I don't know if the story here is I don't think it's ever going back to $150. I'll say that. With that being said, it actually held up okay in 2019 and started to turn around. So since the summer, the stock has doubled. It's went from 10 to 20. So the stock is no longer really is trying to break that downtrend, and actually somewhat looks interesting here. So if I was long it, I would definitely want to see this thing hold above 20. 20 would be kind of my stop out point. But I don't know if
I
I'm
don't know.
necessarily just coming here and getting bearish SIG here, especially in this type of market where you start to see some funny stocks do some rallying here in early January.
I
So
don't know, Dennis. You can't spell bankrupt without K.
okay, he's just an opinion here, but I don't think
I spent about 5 minutes thinking about that one.
thinking about that show coming up there, but I don't think it's going bankrupt. I think Signet Jewelers is going to be around. I don't know if the 7% dividend is safe. It's a hell of a dividend, but it's turned around in the last little while. September, $10 stock. December, $21 stock. So you can say we've squeezed some shorts pretty good here. Maybe just got a little bit overdone. I don't think it's going away though. That's, some of these instances, and I've been, talking about different stocks that I think, like GameStop, that I think eventually might go away. I don't think SIG is going away. I don't know why, but I'm not as bearish as maybe some people on the street. And apparently not as bearish as the Wells Fargo analyst.
No. So moving on to the Evercore node here, it's mostly a lot of healthcare and biotech names that they're upgrading and downgrading this morning. The two that aren't are United Airlines, UAL, upgrading to outperform is Evercore, and Ford Motor, who Evercore is downgrading to underperform now. So besides that, the rest of them are healthcare names. Baxter, BAX upgraded to outperform. That's the big one is Baxter. Varian Medical, VAR upgrade to outperform. PerkinElmer, PKI upgrade to outperform. But besides that, we're getting a United outperform upgrade and a Ford downgrade.
UAL, the number is 90. This is the critical number. It's unbelievable how many highs you had right around 90 in December. So if we go back to the 12th, 89.90. If we go back to the 17th, 89.99. If we go back to the 18th, 89.98. If we go the next day, 89.78, 89.90. These are all consecutive days, 90.10. And then we peeled back from there. So somebody, like Joel would cite this, I think I've got this right, Joel, if you're listening. Somebody's selling a piece at 90. You don't get that many highs in the same area and there isn't somebody selling a piece. Did they get out? Are they out of it now? Maybe. Is they're still sitting there and still refreshing, selling more? Maybe. We're going to probably test it again here today, but I'm not buying it because every time you've bought it at 90 in the past 5, 6, 7 days, it has failed there. So I'm saying guilty until proven innocent. I want to see this thing get above 91 before I get interested. So, because the 90 just seems to be somebody, very big fish, selling a lot of stock.
We're also getting just had it here, an upgrade from Fastly this morning, or to Fastly, sorry, from Piper Jaffray to Overweight, giving it a $24 price target, FSLY.
Oh, I haven't looked at this one for a while. You got to consolidate. You've been in consolidation station. We'll say that. Lots of support in that 18.5 area. So if it could ever get out and get above the 21, which it might try to do today on the upgrade, starts getting interesting. But then you got a few pesky highs around 21.25 too. So we'll move it up. Say you got to get above 21.25 before it gets interesting. It's a stock that's only been out there, 7-8 months. So it hasn't been out for a long time. So not a long track record on this thing. It's interesting above 21. I'll say that. Interesting. But I don't know if I'm jumping it.
You know what? I didn't pull up that 4 chart. Let's pull up that 4 chart. The downgrade this morning from Air.
Never moves. It's such a stock that just doesn't seem to move. It moves a nickel here or dime here. It's downgraded to underperform. It moves 2 cents. I used to trade for it actively. It just doesn't move enough. For a trader, it just doesn't have enough movement. You need some fundamental news to really get interested in trading this. This is a stock that I used to trade like all the time. And I simply just don't trade anymore because it's like moves a penny. It moves 2 pennies. It just doesn't move. So not enough for an active day trader. And the only time I'm trading for it now is when it's got its own fundamental news. Does it turn around and start selling off in this downgrade? I doubt it. 923 is support, 924 from the last couple of days. Take that out. Maybe it could go to a slippery slope down to 9, but hard to really get bearish and or bullish here at this point in time. It's just kind of doing nothing. I need a catalyst. I need, long term, I'm still not a big fan of Ford. Short term, I need a catalyst to take it one way or the other. And I don't think this downgrade is going to be that catalyst. So I don't think you have much of a trade in here.
Someone in the chat mentioning what has been a quiet stock of late, Beyond Meat. Look at that chart. Man, is it quiet.
Well, this could be one of those classic stocks that could benefit from the tax loss selling. Was probably really holding it down here at the end. Could we get a little bit of life in January in BYND for a couple weeks? Maybe. I think Beyond Meat is much lower when we look at it at the end of 2020. So if I was picking bearish stocks, I think Beyond Meat I think I would want to almost wait a week or two before making this call, because I think it could show some life here for the next few days. I think by the end of 2020, this thing's under $50. But that being said, you can trade anything. And seasonality effects, it was an okay candle on Friday on this. I wouldn't be surprised this thing goes up and tests 80 again. So I think there's 3-4 points of upside still here in the next maybe couple of weeks. But don't get caught with this one, because you're eventually going to, I think, take out 71.30. And I think eventually Mark Yusko was on here, and he says he thinks it's going much, much lower. And he was one of the original investors in BYND, just as the valuation's ridiculous. And I agree with Mark here. It's always been a valuation issue. I think Beyond Meat is still going much lower longer term. So if you were trading from the long side, do not get caught. But I think there's a potential for a little bit of January, a little bit of, ease off the tax loss selling from the last couple of weeks. Maybe the laggard becomes a leader for a couple of days, but don't get stuck with this one. I'll say that.
Two numbers to note on Beyond Meat: $45 or $46. That was the open. And $25. That was the IPO price.
If you're looking for later on, obviously these levels aren't today. But if you're
not for today. I mean, just
I think it'll eventually see that $45 price again. I don't know if it's seeing 25 again.
Have it in the back of your head. Have those numbers in the back of your head. 46.
I think eventually it could see $45. If you're in this buying this at 76 and think it's going back to 160, I think you're wrong. I think you're very wrong. I think if you're buying this at 76, I think you're going to lose in the long run. I'm saying I could actually get on board with a little trade, though. If I was setting up a trade for you, I would stop myself out at Tuesday's low, 73.22. I don't want to own it below that. I don't want to get stuck with this thing. It could be an analyst could come out downgrade and the thing could open down $10 too. You can always have that happen too. But the volatility slowed down here a bit. It stopped going down temporarily. I think you might get a better price if you're trying to short it, though. I think this thing could see 80 again, and then maybe get an opportunity to short it again. Again, long term, I do not like the stock.
I'm just scrolling through the chat here. Missed a lot of these tickers that were mentioned today.
Yeah, let's do them. Ticker time for 3 minutes.
Let's look at Caterpillar here.
Caterpillar. I believe JV Spec was saying, I didn't open my book, but he said there's some size up at 150. So I'm going to say that's your major resistance. Trading the 149 handle here. So until I can get through 150, I'm not interested. Get through 150, then it becomes interesting. Then you think, maybe we're going to 160 again. So if we can break through 150, Caterpillar gets much more interesting. Next.
Okay. What
NIO. I see one talking about NIO, NIO.
They had earnings, didn't they?
Was it earnings? Was that the move on Monday?
I'm almost positive they had earnings.
Or was that? I don't know.
On my calendar, it was earnings. Yeah, they reported late last week. They reported, or no, Monday. Excuse me. They reported on Monday. I think they were supposed to report last week, but they maybe moved it to Monday. But anyway, the numbers, I mean, they weren't great, as you would probably expect. The EPS missed, and the sales beat, but they're losing money like gangbusters. So I don't know. They're
big pops. Squeeze them a little bit. We got up near $5. Peeled back from there. Your resistance now is $4.87. $5 is always a big number, because in a lot of brokerages, that's where securities become marginable. They fall below 5. They're not. So this thing's going to have some resistance up at 5. Until I can get above 5, I'm not interested in NIO. So we like CAT above 190. I don't know if I'm ever getting interested in NIO, but I'm not buying at 407 because I think there's overhead supply until you can get above 5.
Yeah, this was the 60 minutes top right here. On
Is that what it was? This is like isn't this the Tesla of China or something they call it?
That's what they called it. That's what they called it. So I don't know about that.
I don't know.
Let's look. Hey, you know what? Let's look at Boeing here. Overtaken by Airbus as the top airline maker in 2019. Not a total surprise when you see that headline, considering all the troubles they had. But we've got a couple days to digest the CEO change at the top. And what do you think of Boeing here?
It's going to surprise you, but I actually don't mind it here. I don't usually buy stocks in downtrends.
Oh, it's down at the bottom of the range.
You got a nice level here, 520 or 320. So as long as 320 holds, so I would say there's a trade setup here. You buy Boeing 326, 327, 328, and you're risking yourself $8 on a $300 stock. It's not that bad. Starts trading 319. I get out. So I don't mind. I don't mind the setup here. That I think maybe the worst is behind it. And maybe there's some potential for some good news in 2020. So is this going to be a turnaround story in 2020? Still to be determined, but you have a potential setup here where you got a nice level where you know where your stop out is. A 320 is a huge level. It held on the big bad day. It's come back down here to retest. Can the 320 hold? That is the question. But I don't mind it here at 328. I think as long as you're stopping out below 320. So that's my contingency plan. Stop up below 320, but I could get on board with buying it here.
Let's do one more. Let's look at Apple. I haven't talked about Apple.
Well, it's been unbelievable. I mean, it's got 300 on the mind here now. So it's come this far. Why not is what I would say. I still own Apple in the long-term portfolio, for full disclosure. I've had it in there for a long time, so I'm in from much, much lower prices. I'm sticking with it long-term. But again, this was an unbelievable performer in 2020. Is it overextended? Absolutely. Is it going to test 300? I think so. I think eventually it's getting above 300. Is it going to 400 or 500? Eventually, I think. But I don't think it's going straight there. There's going to be a significant pullback in Apple to take advantage of, and that will be a buying opportunity. Maybe we get it down to 260 again, and maybe you buy more stock. I would like to buy more Apple on a pullback, significant pullback. But it's been an unbelievable performer. It was one of the biggest positions in my long-term portfolio, and it's one of the biggest positions here now because obviously I think it was up 80% or something last year. Yep. I wish I would have bought more on the pullback. Everybody wishes this, hindsight capital 2020. But I wish, and I thought about buying more when it got down to the 150, 160 level, and then it obviously went down to 140, and the 140 changed at start of the year in 2019. I never did buy more, and I regret that. But anyways, at least I got some Apple.
All right. That is it for our first show of the new decade. I want to thank our guest, Ivan Feinseth. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. You can always catch the replay of our show on YouTube or on our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Spotify. So please remember, all the information from our show meant to be used as informational purposes only, not for investing or trading advice. And everyone have a great rest of your day. We'll be back with you on Friday.